Good evening and welcome to the Business Day. I'm Javon Keys. The Bank of Jamaica says inflation may exceed its 4 to 6% target range again before leveling off by the end of the year. This comes as the BOJ has maintained its policy interest rate at 7% during its more recent decision. The BOJ's Monetary Policy Committee MPC has again kept the rate offered to deposit-taking institutions on overnight placements at 7%. The figure, which has been held since November, is expected to continue tightening the flow of cash in the economy. While addressing the MPC press briefing Monday morning, BOJ Governor Richard Ball says it has been effective.
Interest rates in the domestic money and capital markets and the term rates offered on deposits by DTIs have generally increased in line with the policy rate, with the DTI sector continuing to make small adjustments to rates on savings and deposits. Second, the flow of new loans to the private sector has also declined appreciably in real terms over the 6 months to March 2023 by 6.5% and generally reflects the impact of higher interest rates and the tightening of credit conditions.
As at April, annual inflation was 5.8%, the lowest since August 2021. This also reflected a return to the BOJ target range of 4 to 6%. Mr. Ball says, however, inflation may go up again in the next few months.
Adjustments to selected regulated prices, such as the national minimum wage, recent increases in the cost of communication services, seasonal increases in agricultural prices, as well as pending increases in other regulated prices, such as transport costs, could temporarily lift inflation back above the bank's target range over the next 3 or 4 months. Inflation, however, is expected to trend back towards the target range by the December 2023 quarter.
For the June and September quarters, inflation is projected to fall between 6 to 6.5%. This would be influenced by a number of factors.
Higher than projected future wage adjustments, a stronger than anticipated impact of climate change on domestic agricultural prices, and a worsening in supply chain conditions could put upward pressure on inflation. Further, higher than projected interest rates among the major developed economies could worsen the interest differential, thereby putting pressure on the exchange rate, which would contribute to higher inflation.
Let's head to the foreign currency market now. The US dollar is being sold for an average $155.03. $116.07 is the going rate for the Canadian dollar. The average cost for the pound is $191.30, while it's costing an average $171.16 for the euro. At the end of trading today, the JSE index gained 2,218 points, while the Junior Market Index gained 13 points. Among the 48 advances were Cigna's Credit Investments US dollar shares, Pan Jamaica Group, Medical Disposables and Supplies, Productive Business Solutions 9.75% cumulative redeemable preference shares, and JMMB Group 7% variable cumulative redeemable preference shares. Now, the 58 decliners were led by Cigna's Real Estate Finance US dollar shares, Iron Rock Insurance, Epley 5% preference shares, JMMB Group 7.25% shares, and Epley Caribbean Property Fund, SCC. Now, there were 14 stocks which traded firm at the end of today's session. And that's the Business Day. I'm Javon Keys. Good evening.